Welcome to MES e-learning channel. In this video, we are going to study about redemption of preference shares. Now, what do we mean by preference shares? Have you ever heard about the term 10% preference shares? Correct. This 10% means preference shareholders do avail 10% as their fixed dividend, or you can say fixed returns. With this, one more benefit is availed by the preference shareholders, that is named as preferential rights. Preferential right means one of the right is they are getting the fixed dividend amount. With that, when the company is issuing preference share capital in the market, at that time the company decides about the repayment amount plus the repayment timings. To explain this, I'll give a statement to you. PQR Limited issued 10,000 preference shares, 10%, 10% preference share capital of rupees 100 each, redeemable at rupees 110 rupees after 5 years. Now, if you heard my statement properly, I stated that the preference shares amount was rupees 1 lakh and the company issued it at rupees 100 each. The company decided that it will redeem these shares after 5 years, wherein at the time of issuing the preference shares, they were issued at rupees 10, but after 5 years, the company is going to pay rupees 110. This means the company is going to pay rupees 100, the actual value, followed by extra 10 rupees. We name it as the security premium. So, in this particular example, you can see the repayment amount has been decided, followed by the repayment amount. So, the entire part wherein I taught about you about the repayment timing followed by the repayment amount, this entire process is known as redemption of preference shares. Okay. Now, there has to be certain rules and regulations regarding this, right? So, section 55 will help me out with this. According to section 55 of Companies Act 2013, there are few rules and regulations being laid down on the company for doing the redemption process. Number one is the shares has to be fully paid. Now when I say shares has to be fully paid, I being a company, whenever I am issuing a 100 rupees share in the market, if the general public has paid me rupees 98, I have to see to it that 2 rupees outstanding amount has to be given back, has to be paid to the company by the public. Only then I can go for the redemption process. Okay, so I will just write down point number 1 is the shares has to be fully paid. Okay, then out of the after this, how am I going to make the payment to the shareholders, since we are talking about repayment, right? So after getting all the money from the preference shareholders, I'll be having some profit amount with me in my reserve, followed by few free reserves. So I will be making the payment to my preference shareholders from these two amounts. Okay. Then after this, I'll be talking about discussing about the journal entries with you all. I'll be providing you a statement. We'll try to journalize with the help of those statement only. Now here on the screen you can see the statement. ML Limited issued 1 lakh 10% preference share capital of rupees 100 each. Now whenever the shareholders will invest their money on 10% preference share capital, they will receive 10% as the dividend amount. The company redeemed the shares at rupees 110 after 5 years for the company had issued the shares at rupees 100 each, but then at the time of doing the repayment procedure, the company is paying rupees 110 to the shareholders. For this, the company issued 10,000 equity shares of rupees 100 each. Now, since payment procedure has to be done, the company needs to have some funds, right? In previously, as I told you, the company will make the repayment procedure with the help of profit amounts and the free reserves amount. Okay, apart from that, company can also issue something. Okay, then first I will be passing journal entries with you all. See, before doing expenditure, the company will first talk about the income. So in this entire statement, I can see issued part. Issued means the company will sell out its equity and it will take the do the intake of money. So my first entry will be for the money income. Issue of equity shares of rupees 100 each. My first journal entry will become equity share capital account debit to bank account. Okay, so here it will become 10,000 into rupees 100. 10,000 into rupees 100, it will become rupees 10 lakh, rupees 10 lakh. Narration part will be being equity share capital issued. Now, once I have the money with me, I can go for the redemption procedure. In the redemption procedure, I won't be making the payment first. First, I will take my preference share back from the shareholders and then I will give the money to them. So, in this case, my entry will become preference share capital account debit to preference share holders account. See, now here you can see I have left a space. I'll teach you the logic behind this. Preference share capital, what is the count of preference shares? It is 1 lakh of rupees 100 each, correct? So here it will become 1 lakh into rupees 100. Remember this logic behind balance sheet asset and liabilities transactions. They never write down, they never take any other amount apart from their face value. Here I can see my face value is rupees 100. Though the repayment procedure, the repayment process is telling me that it was being repaid at rupees 110. Still I'll write 100 over here. But then preference shareholders will receive rupees 110, correct? So 10 rupees difference has to be adjusted on our debit side. So that adjustment will be termed as premium on redemption account debit. Okay, now why have I written this on the debit side? Debit premium on redemption is a nominal transaction. Nominal account rule states debit all expenses and losses, credit all incomes and gains. Now, since as a company I am paying extra 10 rupees extra to the preference shareholders, it becomes an expense to me. That's why it has been written like this in this form. Okay, so here my amount will become rupees 1 crore. Here it will become rupees 10 lakh and the total will become rupees 1 crore 10 lakh. Okay, now once I am done with the, see, I haven't yet made the payment to the preference shareholders, correct? I have just started with my redemption process. After this, I am supposed to write down this nominal transaction. For writing it down, the transaction which has been recorded on the debit side has to be written on the credit side like this: to premium on redemption account credit. Okay, now Here from this, in the beginning of the session, as I told you, for the repayment procedure, we are going to use the profit and the free reserves amount, right? So this particular amount will be written off with those amounts. Now what are those amounts? We have general reserve account for this and we have P&L account for this. So randomly, since no else data has been given in the statement, I will take general reserve account debit and I'll write rupees 10 lakh. I hope I'm clear. Once I'm done with writing of the premium on redemption amount, then I'm supposed to make the payment to my preference shareholders. Now since I'm making the payment to the preference shareholders, here my entry will become preference shareholders account debit to bank account, and here the amount will become rupees 1 crore 10 lakh. Narration will be being amount paid to the preference shareholders. Okay, these four entries are totally fine. But what about the other liabilities? What about the other transactions that has been recorded in my liabilities? See, the liabilities side does not only have the capital amounts, they have debentures included in it. They have bank peoples involved in it. The bank people will tell me, madam, you are making payment to preference shareholders. Who will think about us? We have also done investment in your company, right? If you are making payment to them, what about the investment we have done? Okay, so in this case, in order to keep them calm, I'll introduce you all with a formula, that is, I'll write down the formula for CRR. CRR is equal to whatever is the redeemable nominal value, okay? Nominal value of redeemable preference shares minus the nominal value of new issue, if any, the company has done. Okay, so I remember my redemption amount was rupees 1 crore. I was supposed to, at the time of issue, I had taken rupees 1 crore from the public, out of which I have done some new issue equity shares, 10,000 equity shares of rupees 100 each, which gave me rupees 10 lakh. 1 crore minus 10 lakh gives me 90 lakh requirement, right? So for this, I will be issuing, again I will be using the free reserves or the P&L amount. So how this reserve has to be created? I'll take the money from general reserve and my P&L account. I'll assume that, I'll just write it over here. I'll assume that my company's general reserve is having rupees 1 crore 20 lakh with them. Okay, so out of which I have already used some amount for premium on redemption, right? So remaining amount I'll create the CRR. So here I'll be writing general reserve account debit to CRR. CRR's full form is capital redemption reserve. So here I'll be transferring the entire amount of general reserve to CRR. So with this we are done with the sum. Hope you liked the explanation.